TheoTRADE. This is Don Kaufman. April 10th, 2024. Just 20 minutes to go to the cash close here on this Wednesday afternoon. S&P's trading down some 60 handles. Oh, what to say about this marketplace? Well, inflation is back, risk is high, and yet interest rates could still be higher. Let's actually break everything down here, of course, on this TheoTRADE evening update. As I was saying moments ago, S&Ps are trading down, but overall, they took the CPI print extraordinarily well. Look, I know that what you're looking on the screen right now looks absolutely what? It looks horrendous. This could have been a lot worse. So inflation is unequivocally ticking back up. Inflation is going to be a problem. Interest rates, that's going to be a bigger problem right now. If you haven't looked at the TNX, which is the 10-year took all the way off. Oh, wow. We're over right now. We're like 4.5%, actually approaching closer to 4.6%. Don't look, it's hideous. So those rates, though, can go a lot higher. Look at the bond market right now. It's just, it's not even about the percentage move down in the bonds. By the way, the bonds moving down moves interest rates higher, right? Inverse, relationship over there. One of the things that's really bothersome, the volume took off to the upside. Look at the notes over here. I mean, this is massive. By the way, when it comes to volume, this is some of the biggest trading, okay, that we have seen in recent history. You can't count over here. That is a roll. That's actually a roll, so it doesn't count. Just to kind of quantify, when I say some of the biggest volume we've seen in recent history, of course, everybody like their eyes go to here. Nope. Eyes go to here. Nope. Okay. This is some of the biggest trading, though, that we've seen since a previous and tumultuous down move inside of the bonds and notes. So as I was saying a moment ago, don't discount the ability for rates to still go considerably higher. I think what you have to kind of question, though, at this point is, well, first of all, I also said this, like, markets, they took this rather well. At what point, are the bonds selling off going to just snap the back of this marketplace? Look, we're still seeing rotations. The S&Ps might be down exactly 1%, but we're still rotating right towards Meta. I mean, Meta is going to end the day higher. Nvidia is going to end the day up, what, 2%? But I am going to say this. Let's cruise over to the market watch here on Thinkorswim, specifically into the S&P 100, and note, we just broke out into full-blown correlation today. I mean, most of the trading day, we've seen as many, as 99 products to the downside in the S&P 100. This is kind of what we would term, that quintessential, I call it a full court press. It's just kind of that all down day. But you're still seeing a little bit of a rotation again, back into Nvidia, Meta, and you even got Amazon picking back up. This is going to be called into question as the week progresses. And the reason I say that, well, let's cruise over to the SPX, the mother of all products. Again, if you had the CPI report in your hand yesterday, I don't think you could have even fathomed that the S&Ps would only be down 1%. I mean, this, again, it could have been an absolutely horrendous trading session. We easily could have seen the S&Ps down 3, 4, even 5%. Inflation's upticking. The Fed, not only aren't they going to cut rates, there will be talk and consideration. Mark my words, there'll be talk and consideration in the next few weeks. Maybe, the rate hiking cycle is not over. I've been talking about this, by the way, ad nauseum for the past couple of months. 6 rate cuts. 6 rate cuts were priced in just a few weeks ago. Think about that for a second. Now we're talking about possibility maybe of 1 cut, or no cuts. And I'm telling you, they're going to pivot, and they're going to pivot into, hey, we actually have to do what? Deflate some of the asset prices out there. When you have asset prices, like look at this, the S&Ps basically a stone's throw off the all-time high. you got to start to knock some of that down. It's critical. You got to start to knock some of this down because, simply put, okay, all-time high, all right, inflated asset prices, that's going to rekindle inflation constantly. So the reason I brought up the SPX on this evening's video, first of all, I always talk about the SPX, the expected move. This definitely leaves something to be desired. So one of the critical things here, and again, this is SPX, it's not S&P futures, SPX. The lower edge of the expected move is around 51.15. And I wanted to note that right now because I really think that there is some unfinished business. So let's go ahead and put that on the screen, the 51.15 level. Why is it so critical? Come on, in a day with some heavy volatility over here, you kind of feel like unfinished business. We shoulda, we coulda, but we didn't tag the lower edge of the expected move. And we're on a week where the expected move for the entire week is plus or minus 89 bucks. Okay, you had a big boy move today. I mean, the S&Ps right now are pegged at 52.11. But again, a 1% move it leaves so much risk, in my opinion, on the table, even coming into Thursday and Friday. We're not talking about next week. We're talking about between now and the end of the week. The resilience of this marketplace is unequivocally, it's uncanny, right? And it is resilient right now. But the concern is, well, the advanced decline line is absolutely horrendous. The bonds, as I brought this up a moment ago, like everybody says, eventually that breaks the back of the marketplace. Even an overnight trade, I wouldn't be surprised to see the bonds continue to see some sell-side activity overnight as rate fears now, they're going to encircle the entire globe. Why? Let's take a look at the dollar. There's very few times you're going to see the dollar explode higher like this. And ironically, as the dollar is up 1%. I mean, this is like, if you will, think of the dollar as more like the VIX. It's duck and cover, okay? And those rate fears are going to be felt all around, okay, throughout the course of the evening. Even gold right now, it's down nominally. You would expect gold or metals to get crushed down with the dollar being up so substantially, like oil continues to uptick, even with the dollar up massively, none of which are good for the S&Ps. So lo and behold, and again, I'm going to give you my opinion into the end of the week. I think you got unfinished business here. I think you need to tag, okay, that 51.15. And in doing so, then we're going to start to reevaluate. The interesting thing, again, bonds are down really big. The VIX. So I am not one, again, that spends a lot of time looking at VIX. VIX is 30-day volatility. I'm a trader. I'm dead in 30 days. I want to look at here and now. But there is some interesting things in volatility going on. If you look at VVIX, the volatility index, okay, that volatility is still, well, it's still up there. It's flying right now. But the volatility I'm also looking at right now is an SPX, and I'm looking at the short duration options. Not even like, again, you can look at like a 9-day VIX, and the 9-day VIX, whatever, it's up, between 15, 16. The 3-month VIX is elevated to about 17. I'm looking at what's right in front of us. What's right in front of us, April 11th, April 12th. And you open up to Friday's expiration. And the interesting thing is the entire week held about an $89 expected move. Oh, we still have almost 60 bucks of movement priced in. And you got to think of this as like the short-term VIX. It's almost at 20% implied volatility over the next 2 trading sessions. So even if we see that markets kind of held it together today, oh, look, there's going to be a lot to kind of parse through in the next few days. I could talk about today's price action literally until we're blue in the face. I mean, the bottom line, though, this advanced decline line, we snapped to full-blown correlation, okay? We saw all the elements of heavy volatility, including volume raged in the bond market, okay? Volume is really elevated inside of the S&Ps. Volatility is on the move. It definitely leaves something to be desired inside of VIX, but you got to understand, the big risk got pulled away from us. CPI is out. The bang already went off, but we're still looking for follow through in there. And for that, you don't necessarily need the VIX rocking out there. Okay. What is intimidating as can be, though, the dollar cracks through the 105 level, does not look back. I'm telling you, this marketplace could be on the verge of really significant volatility. Do not discount, okay, that again in the SPX, all right, that we come down, we possibly tag that 51.15, look for it into Thursday or Friday of this week. Thanks everybody for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.